So this is a quick video on those who wants to get into dropshipping in 2025. This is not going to be a video on teaching you how to start a store, but it's going to go through all the numbers that you will need to know in order for you to be successful in dropshipping. Again, dropshipping is just a business model. Whether you're running e-commerce, it's still going to be the same kind of calculation. So I'm going to go through all of the numbers that you will need to know in order to be successful in 2025. So first thing first, when you run a dropshipping business, you will have your cost of goods and services. So this is what you will pay for in terms of shipping to AliExpress, to your supplier, um, and all of the other costs that comes with it, Shopify, transaction fees and whatnot. So let's do it. Let's do a simple calculation. Let's say you're selling a product for $15, and the sale price is of course how much you're charging your customers. And so in this case, let's go with 50. So quickly, we can see the pricing analysis here. You have a multiplier of 3.3. And how we get that is we just divide 50 by 15, and then you see the multiplier for this product that you're planning to sell. Now, the profit margin would just be simply 50 minus 15, so you get 35. And from there, you can see your profit margin before ads would be 70%. So what this means is that you will now have a break-even ROAS of 1.43%, or 1.43. So a break even of 1.43 means that you need to spend a dollar on marketing and get 1.43 in ROAS in order for you to simply break even. And this is not accounting for other costs that comes with your business as well. So you ideally want to push towards higher than 1.43 to ensure that you are actually making money. So you can read through the full calculation if you like. I'll pause the video here if you like. I'll go through the next number. So the next number would be your max cost per purchase. So max cost per purchase is simply the number of your sales price minus your cost of goods and services, and you'll get $35 for your maximum cost per purchase. So maximum cost per purchase is the maximum amount that you can actually spend in order to get a customer. And if you are spending more than $35 in order to get a customer, you're essentially losing money. So now let's see if you spend $40 to get a customer. Now you can see that you're negative on your sale on each customer. So you could incur a potential loss of $5 per sale if your maximum cost per purchase, if your cost per purchase is higher than your maximum cost per purchase. So ideally, this number needs to be lower than your maximum cost per purchase. So if I put 20 here, you can see that now for each sale, you can actually be making 15. And it's a simple calculation of just finding your maximum cost per purchase and deducting how much you actually spend on marketing. And then that number would be your profit. So always, ideally, you want to have this at 0, but we are running Facebook ads, so it's not realistic. So 20 would be something that's more realistic, and you can see that your profit margin per sale would be 30%. All right, so the next number that you want to see is your target cost per click. So with Facebook marketing, it's pretty expensive these days to run Facebook marketing. So if you are getting $1 cost per click and your target rate, conversion rate for your store is about 4%, you can see here that you will be making about 20% profit. So you can play around with this number. Say you had a really bad marketing day and you spent $2 and your conversion rate was still the same, then you will be in the negative already. So just changing these few numbers can drastically impact your business. So you need to know your numbers. So the usual target cost per click in the industry would have been about 50 cents to about $2. So it really depends on your creative and how creative you are with your ads. So this number is something that you can control, but it's not a direct number that you can control. It's based on your ad strategy. And your conversion rate would be your website design, how you allow the customers to check out and make a purchase. So the smoother the flow is, the more that you can convert them to being a customer. So if you have a really good website where you get 6%, this is a really high conversion rate, but it's still realistic. You can still push for it, and then you can see a really high profit margin. Most of the dropshipping gurus are really efficient at pushing their conversion rate and bringing their cost per click down. And that is something that you would need to learn yourself in order to find what is a good conversion rate and cost per click for yourself. So now let's say you have a target ROAS of 2.5, right? and you are planning to spend $1,000 on ad, you can see that you will be making a profit of 750. What does this mean? It means that if you spend $1,000 on ads and you get 2.5 return, that means you get a $2,500 return. And this means that you have to sell 50 units. And so with the profit would be 750. The simple formula is just revenue minus your ad spend minus your cost of goods and services. So your cost of goods and services is again how much you spend selling to the customer. So in this case, it would have been 15 units, $15 per unit multiplied by 50, and that's how we calculate the eventual profit. So again, we can play around with these numbers again. So if you have a higher ROAS, say you had a really good month, and you had a ROAS of 3, then you can see this number is pushing up higher and higher. And this can also go up if you spend a lot more money, and maybe this goes down a bit. Then you can see, okay, if I were to scale, I would expect my ROAS to go down, but my ad spend, it's gonna be supplementary to my ad spend because I don't mind spending more with a reduced ROAS as long as I'm making a lot more money here. You could have spent 1,000 and just get a really high ROAS, but then you're not gonna get 6,000 in return if you unless you can get a higher ROAS. So you need an insane ROAS in order just to get that same amount. So you eventually have to spend a lot on your ad spend in order to get a good return on your money. So conversion rate from target ROAS and target CPC. So let's say you have a ROAS of 2 or 3 that you want to target for, and you have a cost per click goal of say 1.5. So now you see that your website needs to do a lot of the effort because now your CPC has gone up way up high. So now you want to then strategize and reduce your cost per click in order for you to see a more realistic conversion rate for your store. So again, all of these numbers impacts each other, and it's really important for you to know how this impacts your business. So now we can also see the campaign profitability. So let's say you spend 1,000 on ad spend and you had a ROAS of 3. You can see that the projected gross profit would be 1,100 because you will be selling 15 units. Each of the unit is selling at $50. You had a projected sale of 60. Now you had a cost of goods of 900, which is just 60 multiplied by 15. And then you get a projected revenue of 3,000, and you deduct the 900, you deduct the ad spend, and that's how you get your projected gross profit. So I wouldn't go through a lot of these other calculators. I think it's beyond the scope of for a beginner. But the one that I do want to go through is the discount percentage. So if you're starting off, you might think that, hey, if I just give a simple 10% discount, that would make my customer want to purchase from me really quickly. So if I put here 10%, in order for you to get the same total profit that you have right now, you must increase your sales volume by 16.7%. And trying to achieve this is really, really difficult task for any new beginners. So usually, if you want to strategize, it's best to find a winning product. So a winning product usually would have a ROAS of about 1.25 or anything below 1.5. So this might be a winning product, but a more unique product would have been something like 25 and you had a selling price of say 80. So now you see that although the ROAS is still within the same number as before, now your profit margin is much higher. So this means that you can spend a lot more money in order to get a single customer. And the profit margin has reduced, but this has increased, which allows you to spend a lot more on your marketing. So if you go back to the CPP analysis, so if you had a CPP of say 30, now it's a much easier goal for you to just get it's a much easier goal for you to spend more money and just get a smaller ROAS for a profit margin. And again, these numbers also change. So now it's much easier for you to get the usual average industry goals of CPC and conversion rate, and you can still see a 2.4 ROAS with a 27% profit margin. Now you can see the challenge that a lot of these numbers keep changing drastically, and that's why we have this tool where you can simply look at all of your numbers changing with a simple click. So let me open up this. So say we were at the previous product price of 15 and we are selling it at 50, you can see that if we make a small adjustment to our cost per click, say we are targeting a cost per click of 1 and a conversion rate of 4, you can see now we are just hovering above the break-even ROAS, which is this line that is running through, and we can expect a total net profit of 2,000. And of course, there is business overhead. So let's say you spend 29 for your Shopify store, you spend I don't know, $50 on hosting or whatever it is. So you can put 100 fixed monthly costs, and now the total net profit here would adjust on itself as well. So if you were to end up somewhere here, say you had a really bad month, you had a CPC of 1, and you had a conversion rate of 2%, then you would be in the negative region already. So the goal of this is to always avoid trying to be anywhere in this. So say you had a really good month, you had a really good cost per click at 0.5, and you had a conversion rate of, let me change this. You had a conversion rate of say 4%. You can see you are on a really nice area here, and this is a 4 ROAS. So a 4 ROAS would be a really successful business. But if you want to be more strategical, you can look for something more realistic, say a 3% and a 80 cents click. So you will be spending quite a bit sum of money, but again, you're still profitable. It's a small gross profit percentage. So ideally, you wouldn't have be selling this product because the cost per purchase is just really expensive. So if you look here, the cost of the maximum cost per purchase would have been $35. So again, if we had changed that back to the product that we had in mind, which is the 25 and selling it at 80, for example, you can see that the maximum cost per purchase is now 55, and this is now 1.45. And with the same conversion, same marketing numbers that you get, you can be highly profitable. You're now at 36% profitable compared to the previous graph. And say, even if you had a really bad month of 2% conversion rate, right? Say this goes back down to 2%. Maybe your website had an issue or something and it's not working, you're still going to be profitable. And even if you went back to $1 here, this is a really bad industry average, but you're still going to be making money, right? So it's really important to figure out your product strategy first. So there's a lot of tools that teaches you on how to find a winning product, but this is not the goal of it. The goal of it is to know that your winning product has to have a good enough margin in order for you to be able to spend a lot on ads in order to make some money. So let's go and finish this off with a nice number. So let's say you had a 0.8 80 cents click and you had a 4% conversion rate. You'll be looking at making 4 ROAS. You'll be making 8.65 K in profit. That is after you deduct the revenue, you deduct the ad spend, you deduct the cost of goods, you also deduct all the business overheads that you have, and you get this number. So in order for you to get to that number, you need to perform your marketing, and that will be through Facebook ads. So usually this will be something like this. So now if you had a ad spend of 5,000, you spend 80 cents, you had a conversion rate of 4, you had a really bad product that we initially started off with. Now you're going to see that your return on ad spend is going to be 2.5, which is still pretty good. But it could have been better if you simply had a better product. So I'm going to change this to 3% like what we had. So now you see the profit margin is really low, and we simply change the product to be a more of a winning product with a good margin. And you can see the profit margin went up. And if you work on your landing page and change the conversion rate, you can see that there's also changes. So again, it's really important to know your numbers, and it starts with doing all the calculations. So if you hate doing all the manual calculation, this is a really simple tool that also allows you to calculate your profit and losses and also visualize your marketing strategy. You can also do upsell, for example, and you can connect to it. There's a lot of different strategy that you can look into. You can do product bundling, you can do a discount code, for example, and you can see all the numbers changing when all of that is happening. So my favorite tool will be this, because when you first start off with dropshipping, you need to really find out a winning product. And the winning product is not just the features of the product, but also the numbers that goes into the product. So if you're interested in this tool, do check out the description. I'll put in a link to the tool. It's a really affordable tool. So if you don't like it, that's 100% money back guarantee. So please look into it. All right. So that's it all for now.